Franklin Partners was formed in 2009 because we saw a big need in the market. After the GFC, interest rates were falling. They'd fallen from 7% to 3.27%. A lot of people needed to get some extra income. The other side of the equation is that a lot of the banks have tightened up on their lending criteria. So a lot of business people out there needed short-term funding to be able to do their projects, and the banks were turning their backs on them, not wanting to help them. So Franklin Partners, we saw a pool of people who wanted to earn higher interest, people who wanted to borrow and prepared to pay a little bit higher. So our role is marrying those two pools, large pools of people together. We consider ourselves to be the market leaders and a very safe investment in the fact that all of our loans have mortgage insurance on them. So if there is any defaults, we've got a guaranteed buyback from the insurance company. Our maximum loan to value ratio is only 75%. However, our average is around 55%. Interestingly, the big four banks average 68% loan to value ratio. So the benefit we can offer to our investors is the fact that there's good safety and security with the reinsurance in place. We pay a good return of 8%. That return is paid quarterly, and they get regular cash flow with the option to take out shares in the company in a couple of years' time and get some potential capital gain. The chairman of the board, John Rivett, is a barrister with over 30 years' experience in commercial law, lending and mortgages, as well as being involved with financial services company and having his own Australian financial services licence. The founder, Gary Fitzgerald, pioneered private mortgages 15 years ago, has built up companies and not successfully on-sold them, and he started Franklin Partners 3 years ago. My role in the company is as business development manager. I've been in the financial services industry for 25 years and done a lot, especially with self-managed super funds. In the last 12 months, Franklin Partners now has over $3 million in funds under management in mortgages. In the same time, we've seen our requests for loans double to look for our services. So what we're looking for is a pool of funds that we can help these people that inquire for loans that meet our criteria of security, good credit rating and good exit strategy. In the last 12 months, we've helped over 50 individuals with loans, and one that comes to mind is a typical client that we were able to help. He was a tile importer who had the opportunity to buy tiles at $1 each that he could then on-sell for $9. His bank was slow at providing loans for him and coming to the party. We were able to help him very quickly to raise the money. He bought the tiles, on-sold them and made a very good profit from it. And that's a typical loan that we provide to help business people. We see our business expanding. Most economists think that the RBA will continue to lower interest rates, which means a return for investors will be getting smaller. By the same token, banks are tightening up in their credit regulations and making it harder and harder for small businesses to borrow. What also we see is that more and more self-managed super funds are being established every week, and we see this as people who are looking for an opportunity to invest in a high-yielding, safe, secure investment like our products. So we see some very good times ahead for Franklin Partners. To get on board with Franklin Partners, because we offer them the opportunity to earn high-yielding income along the way, much higher than average at 8%, gives them surety of money, and then if they're happy with the returns they're getting from us and they like the way the company is growing, they then have the opportunity of jumping on board and becoming a shareholder as well and participating in future growth Franklin Partners have. Simply visit the website franklinpartners.com.au and read more information, or you can email me on david@franklinpartners.com.au.